In the energy quadrant today, looking at the June crude oil, which actually gapped lower by 41 basis points on the high today. So a straight down day in crude oil, down over 4.5% on the lows. So a very big move on the low side of things, 63.09, almost broke that $63 mark, down 4.52% on the lows. That's actually the biggest single drop we've seen since April 5th, when crude was down 6.6% on the lows and finished down 4.56%. Today on the close, down about a little bit more than 3.5%, but still below that 64 mark, in the high 63, 68 range on the close. That high today, 65.81, and again, that was lower than yesterday's settlement by about 41 basis points, so a little bit less than 0.5%. The Colonial Pipeline is resuming some operations. So the pipeline reopening is a big part of the headwind in the price of crude oil today. Now, that shuttered pipeline is not going to reopen all at once. There's only a certain amount of product they can push through the parts that they've reopened, can only move at a certain speed. So overall, the pipeline reopening is good for some gas shortages, but it seems like analysts feel that the gas shortages were more driven by gas hoarding, with the fear of future shortages if the pipeline didn't reopen. So it's pretty good news that it's reopening, and that's showing in the crude oil price as well as the RBOB price, which fell substantially as well, down over 3 percentage points at one point today. So a lot of it is due to that. But also, there was a mixed bag in the EIA report today. We had lower refinery utilization, although it was still up over 86.1. So that's a good sign. U.S. commercial crude inventories, not counting the ones in the strategic reserve, decreased by only 400,000 barrels from the previous week. So now that sits at 484.7 million barrels of inventory, and that's about 2% below the 5-year average for this time of year. And total motor gasoline inventories increased by the same amount, 400,000 barrels last week. And that's about 1% below the 5-year average for this time of year. So all of that is pretty tame, and it's a pretty mixed bag. And when you put in the Colonial Pipeline, looks like we're going to have to wait until next week to sort all this out, because this EIA data didn't really have that closure in there. And it's likely to affect refinery utilization as well as obviously supplies, since they couldn't be shipped through that pipeline.